The first interview with the newly appointed MD and CEO. We've got Yashpal Gupta joining in on the show right now. Mr. Gupta, good morning. Good to have you on the show and congratulations for the new innings firstly.
Thank you very much.
Okay, let's try and understand what really would be a growth strategy for the company given that housing finance companies are particularly in a tight spot as opposed to other NBFCs right now.
Yeah, that's correct. But the advantage that we have is that we have been unaffected by the liquidity crisis which has affected most of the housing finance companies in the recent past. So that will be one. And of course, second is that we will also explore certain new products like purchase of portfolio which we had not done in the past. Then we'll try to prevent or minimize the takeovers and try to diversify our base of business. This will be our strategy.
You remain unaffected because at the end of the day, the housing sector is a function of demand and liquidity. The demand may be strong, but liquidity surely has become tight.
No, for us, fortunately, it is not, because our business model is that we were not dependent on the market borrowings that much. In fact, when this played out in August last year, we had only 450 crores of CPs, which we have retired, and then subsequently we have taken fresh. We still have more than 1200 crores of unutilized bank limits. So liquidity for us was not a problem. In fact, I would say demand side is a problem in the sense that the real estate sector has been affected, as you know, by the crisis facing the real estate industry as such. So our actually suggestion to the government which we have given in the past is that apart from the availability of credit, probably certain steps that need to be taken by the government for improving the sector sentiment. For example, GST on cement may be reduced, which Finance Minister has already indicated that it will be done going forward. Then the stamp duties are quite high. As a result, sale and resale do not happen that frequently. So even that also government needs to do something. Then availability of land is an issue, because when we talk of affordable housing, what we find, the cost of the house is less, but those flats or houses are very far away from the city, which people do not find convenient. So I think government needs to take some steps in this regard also. As far as we are concerned, liquidity is not an issue, demand is an issue.
Demand now issue, a year ago, and it's not about your company, I mean everyone I spoke to, they said if one thing we are bullish on is the low cost housing demand, if one thing we are bullish on is that Indians do not have houses and they'll continue to buy houses. And I used to ask them that, why are you so confident of housing demand when real estate is in a glut? They said, look, that's because Indians don't have too many houses. But now everybody is telling me that the demand for housing has got punctured.
Maybe punctured is a strong statement or strong word. I will not use that word. But see, that is where the dichotomy comes into picture. It's a fact that India is a country of 125 crore people. It's also a fact that people are moving between cities, so the family sizes are reducing. As a result, the demand for housing should go up. But at the same time, there is also a requirement. Like if you take the example of Mumbai. Suppose you are serving in Nariman Point, you want a house, but you don't want to stay in Virar or beyond, is it not? You want a house which you can buy within your budget, same maybe in Malad, Kandivali or Borivali, not beyond that. So I think that is an aspect which needs to be looked into.
Okay. What will happen to your spreads when you say demand is low, and since you represent a segment which is largely the non-salaried segment, in order to generate more demand, are you likely to make your interest rates lower? In order to gain market share, would you be giving rates which are historically much lower than what you've commanded?
No, theoretically, or if you see practically, for last few years, our company has maintained a healthy spread of 3%. Without giving high yield products like builder financing or project financing, etc. We propose to continue to maintain average spread of 3%. So the interest rate to the customers will be a function of our cost of borrowing. If our cost of borrowing goes down, we will definitely pass on the benefit to the customers. But if our cost of borrowing goes up, then probably we'll have to also raise the interest rate accordingly. but our target is to maintain a spread of about 3%.
Also wanted to understand, Mr. Gupta, what really is happening with Repco's ALM position? If you could just quantify that, what happens, how does your business get impacted if indeed the RBI comes in with tighter norms on ALMs?
Okay, so as far as ALM is concerned, we are quite comfortable because we don't have a short-term borrowings. Our CPs are hardly as of now only about 125 crores, which we raised a couple of weeks back because interest rate went down. Most of our loans are bank term loans, which are about 5 to 10 years maturity profile. The asset profile, maturity profile is average is about 14 years. So to that extent, there is some mismatch, but that gets covered because there are a lot of prepayments and balance transfers happening. So effective, if you see, our asset maturity profile is also about 5 to 7 years. In this sense, I'll give you an example that as on March 2018, our asset book was 9,800 crores. Out of that, if you take repayment and prepayment both into account, we expect about somewhere between 1,900 crores to 2,000 crores being repaid or prepaid during the current year. So as a result, the average asset profile is also 5 years. So if you take that way, we don't see a problem at all. What will affect us is that, for example, if RBI comes with stringent norms like liquidity requirement, maintaining certain liquid assets, that will affect our return on assets because we will have to invest in liquid assets where yields will be lower, and that may have an impact on our profitability. But we have to see as to what type of guidelines do come and how do we achieve that and what impact it will have. But I don't see liquidity wise it will affect us, but yes, it may affect our profitability somewhat.
About your NPAs currently, where do they stand, and what is your plan exactly to bring them down?
Yes, NPA is of course an area of concern for us. As on September, it was about 3.6%. Of course, December figures I cannot disclose because they are subject to audit. But that is an area of concern for us because of the problems, because most of our customers are non-salaried segment. So they do get affected by things like demonetization, GST, even though they are things of the past. But it does take time for their businesses to come online. So that is one area where we next 6 months will be focusing very strongly on, and we'll try to reduce the NPAs because that is an area of concern for us.
Also wanted to understand, Mr. Gupta, you know, there have been a lot of concerns, like we just highlighted as well, on the real estate sector, and you were, telling us about how exactly is the demand-supply situation when it comes to the real estate sector. If you really had to stick your neck out and tell us about when is it that you actually see a meaningful recovery in the sector coming in, how far do you think that is?
Of course, difficult to assign any time period for that, but what I feel is that government needs to do certain things, which I told, because as we also know, there are a lot of units which are unutilized, in the sense they are purchased, but they are simply remaining closed because people are sort of not willing to sell them, and when you buy, there are registration fees is very high. So I think apart from the availability of land, cost of construction going down by way of easy availability of cement at a lower cost, also probably stamp duty needs to be improved, because that I think these are the things which government needs to look into. But as far as when will the sector turn around, to be frank, I cannot assign a number, because we are hearing from when we talk to our counterparts or the players in the real estate market, some say 12 months, some say 18 months, and figure keeps on getting revised. So I will not take a guess on that. But yes, it will take some time.
What would be your key focus areas and the outlook that you can offer for 2019 in terms of the, gaps that you hope to bridge?
Yes, so focus area is that because we hope that after the elections, market should pick up, especially our core market of Tamil Nadu, which has seen a very low growth in last couple of years. We expect a pick up on that. So that is one area where we'll focus on. Second is that we'll try to widen our customer base. As I told you, by diversifying into other states which have already begun the process. In fact, Tamil Nadu share in last couple of years has come down by about 63% to 58%. Our long-term target is to reduce it to about 50%. On the liability side also, while we don't feel sort of ALM issues, but at the same time, there is a too much dependence on the bank funding. So probably that we need to look at diversifying our liability base. And maybe on the product side, we'll try to bring some innovative products. But right now, we are not thinking of areas where we are not present, like builder financing or project financing. Maybe we can be slightly more active in sell and resale of the portfolios, that is trading of the loan portfolios from others. That is one area where we can look into.
Okay, we leave it at that, sir. Thanks very much for taking out the time to speak with us, and we wish you the very best for the future.